Good afternoon, everybody. If you don't know, I am Lisa Poff, and I am Project Director for the Indiana Deafblind Services Project. And I want to welcome all of you today to today's virtual workshop with Gordon Holmes. I am going to let Gordon introduce himself when we get to that point. I did want to start with some logistics. I want you to know that when you come in, all your microphones are muted and your webcams are off. Throughout the session, you can feel free to post comments and questions in the chat box. Everybody can see those. I will make sure that Gordon knows that there are questions there, if just to make it easier for you, Gordon, so you don't have to continually reference it. If you don't know, in order to access the chat box, you click on the toolbar at the bottom of your screen and you type in the comment or question and click send. We are being live captioned today, so if you need to have captions and they're not on, you can click on that toolbar at the bottom, and there's a button there to turn on your closed captioning. We're also recording, and assuming that Gordon is okay with that, I will probably make it available later on our website. And then at the end of the session, I'm going to ask that you complete a session evaluation that will help us in planning for future activities. And you must complete the evaluation for me to send you a certificate of attendance. I will give you until February 1st at 5 p.m. to do that, and then we will mail out email certificates on the 7th or the week of the 7th. If you have any problems today, you can send me a little text in the chat, or you can email me if you can't get in back into here and you are trying to get in at lisa.poff@instate.edu. I guess that's kind of all I had to say. So I am going to pass it over to you, and we'll just keep letting people in as they arrive.
Thank you, Lisa, and to your great organization and all the great works that you do. Of course, I speak from a professional standpoint as well as a personal standpoint. Professionally, I'm a CFP, a Certified Financial Planner. I'm a fiduciary. I've been in practice for 40 years. My practice is almost exclusively focused on the legal, financial, and government benefit issues faced by the special needs community. I have offices in Indianapolis and Louisville, and between both offices, we serve the entire state of Indiana, from Angola to Crown Point, where I'll be this evening doing an in-person workshop at the high school up there, to Mount Vernon, which is beyond Evansville, and down to Lawrenceburg, so all over, and then through the Louisville office on down into Kentucky. So all total, we work with about 3,000 families. And so every day, needless to say, our email blows up and the phones are off the hook and so forth, because there's a need for help with this stuff. It's complicated, and it's of course it's personal, and it's so important. And I also speak from a personal standpoint in that I have a son on the autism spectrum who also has a very aggressive case of Crohn's disease. So I'm sensitive to a variety of issues as it relates to special needs professionally and personally. So again, thanks so much for the opportunity to share today. Today's program, and it is one of a series of 4. So I'm really excited that my opportunity to share with you will extend from January to February to March and even April. I have a sneaky suspicion the weather will be warmer come April, so that's got to bring a smile to everyone's face. Enough of this winter hooey already. So at any rate, we've got workshops planned. February is going to be an exciting workshop on guardianship and guardianship alternatives, included supported decision-making, durable powers of attorney, healthcare directives, etc., and also on ABLE accounts. ABLE is relatively new. I think most of us have heard of it or seen a brief presentation or snapshot. We're going to take a deep dive in February into ABLE accounts. There have been multiple changes relating to ABLE, with, believe it or not, the last change just coming within the last month. And so we will have the latest and greatest as it relates to ABLE, what it does, what it doesn't do. There's some misinformation out there. And so I really look forward to the session in February, where we again take a deep dive into guardianship alternatives, and ABLE accounts. In March, we will be focused on special needs trusts. And this is not special needs trusts of your grandparents. This is the special needs trusts of today. You may or may not be aware that there are about 4 different types of special needs trusts. And so we also will have the luxury of time and be able to look at, do a deep dive into special needs trusts, first party, third party, self-settled, the Trust Fairness Act that passed in recent years, pooled trusts, Miller trusts, qualified disability trusts. It's amazing. I'm just so excited to share with you about special needs trusts, and that will be in March. And we'll also talk about trust funding, because some people think special needs trusts are for the wealthy. And the good news is special needs trusts are for anyone that has a loved one that has special needs. And so again, that's March. And then in April, we're going to do something cutting edge, and we're going to delve into life care planning and look at a timeline for the planning process and the special needs journey, et cetera. And we will pull together in session 4 in April a lot of the various elements that we're going to visit along the way today through March. So that will wrap up the series, again, with the workshop in April. So we have a full agenda laid out over the next 4 months for you. And I'm so thankful to have the opportunity to share it, and hope that you found the information not only helpful, but actually downright exciting and inspiring, because it's amazing the options and opportunities that are available to the special needs community today. And speaking of today, it's government programs and benefits. And so here we rock and roll. I want to remind everyone there is a chat box. And so please click on the chat box and enter your questions. I love questions. Again, they help break up the presentation, keep it interactive and more meaningful for you. So please do not hesitate to enter questions there, and it will be my pleasure and my honor to address and to answer them. Okay, we and my team and I, and I'm not a team of one. I'm very thankful. I have a team that supports my efforts. You can imagine working with thousands of families. There's a lot of work to be done. And so there is a whole team that supports my efforts, and we all work together to help these special needs families across Indiana and Kentucky. However, by way of disclosure, we are not all things to all people, despite the fact that we often told beyond an 8-hour workday to help families, but have to disclose that. Special care is a name that's very near and dear to our hearts here at Mass Mutual. It is the special needs planning program at Mass Mutual. And we sponsor a lot of organizations and attend their national conferences, state conferences, and work a lot with nonprofits. I just happen to be the person in the local geography, but you name the nonprofits, we try to attend the events, participate in their functions, assist them with fundraising, do sponsorships, et cetera, to support their missions, and in turn, create opportunities for us to share this helpful information as we are today. Today, speaking of that, we're going to look at supplemental security income, SSI. We're going to include with that the impact of employment. We're seeing more people in the special needs community embrace employment or employment opportunities. And so we'll look at the impact of that. We'll also look at Social Security disability income or insurance. And oftentimes people say, well, that's for those that have employment. But actually, interestingly enough, many of our special needs population end up drawing Social Security disability income, even if they never worked a day in their lives. So that may come as a surprise to you, and consider it a bit of a teaser, because we'll come back to that and address how somebody could draw Social Security disability income, even though they never paid a dime in payroll taxes, never paid into the Social Security system. How could they be eligible to draw? Okay, the impact of employment on that, something called adult child benefits, Medicaid and Medicaid waivers we'll touch on today, and Medicare as well. Medicare is kind of an odd topic, you would think, because most of us think of Medicare for individuals that are 65 and older. But interestingly enough, thousands of people are on Medicare at very young ages, including individuals in their 20s. And so we'll talk about how could somebody that's never worked draw Social Security disability income, and how could someone that is 20 some odd years old have Medicare? So, and then of course with waivers, we'll talk about how somebody that comes from a wealthy family could have Medicaid. So there are a lot of conundrums with these government benefits, et cetera. And I always find it both interesting and exciting to kind of unpack this and what all they mean, what all they do, and so forth. Again, I invite anyone and everyone to enter questions into the chat box as we roll forward. So supplemental security income. This is getting a lot of attention these days. And you may be aware that the reason SSI, or supplemental security income, is getting a lot of attention is not just because due to COVID, most of the meetings are virtual these days or by telephone, and not just because they're behind, Social Security is behind because of COVID and staffing issues, but probably more than any reason, it's because the benefits due to cost of living jumps or increases have gone through the roof. So we're seeing now an individual drawing a full SSI benefit amounts to in excess of $10,000 a year. I mean, who would have ever thought SSI would provide over $10,000 a year, tax-free, both federal and state? And so we're going to talk about that. It is designed to help those that are aged that don't qualify for Social Security retirement, meaning they've reached the end of their life and they simply are not insured for Social Security retirement benefits. So SSI can be a safety net for them. Also for individuals that are visually impaired or blind, and then people with disabilities who have little or no income. So SSI kind of fills in all those various gaps. Disability needs to be expected to last more than 12 months or result in death. So this is not the broken arm, the sprained ankle. It's stuck with the person, meaning they're going to have this diagnosis or this disability for an extended period, and obviously it's a serious situation. It provides cash to meet basic needs for food and shelter. So again, the focus of SSI is food and shelter. Of course, Medicaid is healthcare. So that's how the safety net gets woven together to focus on food, shelter, and healthcare. For 2022, as we recently updated this, the maximum benefit for SSI, certainly here in Indiana, is $841 per month. Again, that totals annually at over $10,000. And $561 is the lesser benefit level. And that's the benefit amount paid for individuals that Social Security has determined is deemed or receiving what's called in-kind support and maintenance, otherwise referred to as ISM, ISM. And so everyone, of course, wants the 841. And so I'm so often asked, how do I get that maximum benefit? I'm getting 561, but I really need to want to be up at the higher benefit level. And so that is related to how Social Security considers the situation, whether they're considering the consumer or the individual with special needs as receiving this in-kind support and maintenance. Another way to look at it is, are they subsidized? And, with the study of Social Security and understanding how the Social Security representative comes to a conclusion is incredibly helpful in how to position a consumer and family situation to increase the likelihood that they will receive the 841 instead of the 561. So, but it's interesting because with benefits now being 841 and next year, probably $900 per month, the gap between the 2/3 benefit and the full benefit has gotten more substantial, almost at $300 a month. And so as a result of that, there's a lot of focus on trying to get to the maximum benefit amount. For many of our young people that apply for SSI at age 18, they are relegated to that ISM status, and their benefit is initially approved at the lesser benefit amount. So in some cases, I think Social Security does that so that when they deliver a back payment, they can deliver that 3, 6, 9-month back payment at a lesser benefit level. But nevertheless, it is what it is. And most of our 18-year-olds come on board with SSI at this year at 561. I do coach families on getting their benefit increased, and was responding to an email just an hour ago from someone whose child has been approved for SSI. So that's a good thing, and approved at the lesser benefit level. And so she was inquiring as to, would it be possible to get to the 841 and what is involved with that, et cetera. And so in our coaching of families, we actually use Social Security's own material and their own vernacular. So it makes it more difficult for them to obfuscate the responsibility to deliver the higher benefit. The last bullet point is no stranger to you, of course, and that is the resource limit. The resource limit for all 1634 states, which are about 35 or so out of 50 states, are what we call 1634 states where SSI and Medicaid are glued at the hip. And so the available resource maximum in Indiana is 2,000. That applies to all forms of Medicaid for a single individual, and it applies to SSI as well. Now, that available resource applies to the individual or the consumer receiving services, not necessarily to other people. So this is specific to the individual with disability or special needs. All right, continuing on, at the age of majority, eligibility is based on the child's income, not the parents', although their statement of household expenses and contribution can affect the SSI benefit level. So if income or the, shall we say, standard of living is so high in a family situation, you'd think that automatically the 18-year-old would qualify for the maximum benefit, but it actually backfires. So the key in most cases is to convince Social Security that the individual is paying their own fair share, that they're not being subsidized, that parents are not paying their way. And so again, we help families develop what the monthly contribution is toward food and shelter expenses for their child with special needs. And through that process, we can much increase the odds of getting the 841 benefit level. I'm often asked what things affect the amount of SSI a person receives. Well, one is whether they're considered receiving in-kind support and maintenance. We just talked about that. Are they subsidized, or are they really paying their fair share of household expenses, which is primarily food, either rent, share of the mortgage payment, and utilities. And then the second area is income. So income, of course, affects SSI because it's a safety net. And if a person has a lot of income, they don't need SSI. But the way Social Security approaches this is first, they look at the first $20 of income of any type. Could be gifts, could be interest income, a stock dividend, but nevertheless, they look at the first $20 of income of any type and they set it aside. They do not consider it in calculating the amount of the SSI benefit. Then they also give the same treatment to the first $65 specifically of earned income. So $20 is of any type of income, including earned income. The 65 is specific to just earned income. Then these amounts are not counted. So for most individuals with special needs, it's $85, the 20 plus the 65 against their earned income. After that, there is a $1 reduction for every $2 earned. So if they earn $2,000, that would be a $1,000 reduction, unless they're still in school. And this is a real gem. And Social Security doesn't talk about this a lot. And Unfortunately, as a result of that, students that actually are eligible for the earned income exclusion do not get the benefit of it because Social Security doesn't often see their role as that of educating individuals. And so if one does not know about the student earned income exclusion, they may not see the benefit of it. But what it allows an individual to do up to age 22, so again, up to age 22, if they are still in their secondary education experience or post-secondary education, such as taking some classes at Ivy Tech or in technical training school or that type of thing, then they can actually be eligible to have so much in the way of income per month and for the year without it adversely affecting their SSI. So I often encourage parents to explore or experiment with employment, excuse me, while their child is still in their secondary education experience, because Social Security is much more forgiving up until the age of 22. Then there is child support. And in the case of child support, some of the child support is waived or doesn't have an effect prior to the age of 18. But in many cases, our children with special needs don't qualify for SSI until 18. And starting at age 18, there's a dollar for dollar reduction on SSI for child support. And so what that means is that for each dollar of child support received, there's an equal measure of reduction on SSI. So if the child's getting $400 in monthly child support payments, their SSI would therefore be reduced from $841 to $441. So not a lot of financial gain in attempting to enforce a child support order beyond the age of 18 if SSI is involved. Okay, the last slide on SSI, summary of factors that affect it. So a consumer must be 18 years of age or older if parents' assets or income are not to be a factor into eligibility. The second is monthly contribution toward food and shelter. And that affects it because if we get the monthly contribution right, then there's a good chance the monthly benefit received will be the higher amount, presently the $841. Also, resource limit 2,000 have got to stay under that. Again, that's SSI, that's Medicaid, Medicaid waiver services, all have that $2,000 resource limit. And that's cash and cash equivalents, basically anything that's cash or can be easily converted to cash. So that could be a mutual fund stock, it could be a CD, a savings account, a checking account, a coin collection, including mutual funds or investment accounts, basically any account that bears the name of the consumer with special needs or is set up under their Social Security number. This includes UTMA accounts, Uniform Transfer to Minor Act accounts, custodial accounts, et cetera. Okay, earned income. This is the first time we've touched on this, and this is a really important limit. It's what's called the SGA limit, Substantial Gainful Activity Limit. This is the threshold that Social Security uses to measure whether one is disabled or not disabled. So if one's earned income consistently exceeds $1,350, and that's the limit for this year. Last year it was $1,310. But if their earnings consistently exceed what they call the substantial gainful activity or SGA limit, then Social Security is going to exit the picture. That is, they feel the income has risen to a level where the individual does not need SSI and their benefit will be cut off. So the 1350 is an important limit to remember. And it used to be the thought of reaching the SGA limit it just seemed hopeless. But with increased employment opportunities for individuals with special needs and disabilities, we are seeing individuals flirt with this number on a more often basis. The exemption, student earned income exemption we talked about, child support, the importance to apply for SSI prior to the age of 22. So if you do have a family that you know of that has a child that's 20 or 21, and they've kind of put off the discussion about guardianship or SSI or this type of thing. There's quite a bit of incentive to apply for SSI to start the claim prior to 22, even if it's just a month or two before age 22, a tremendous benefit in being established in the Social Security system prior to the age of 22. Last but certainly not least is be prepared to appeal. Social Security approves only approximately 30% on the first go around of submitted claims. So you will want to expect to appeal, because to get turned down is in the majority, not the minority, but in the majority. And more people are successful on appeal than they are the first time around. So it's never the first, never the last word when one is initially turned down. And sometimes people are turned down and it's just so obvious that they should be eligible. So you just wonder if sometimes Social Security wants to know if they discourage you a little, you'll go away. And of course, the answer is heck no, we're not going anywhere. All right, we're now going to look at a couple of examples with SSI. And there are actually 3 examples in total. There's an additional one on the next screen. But I want to remind everyone that questions are welcome, and would love to have any questions about the subject matter we're covering. There's no bad question, it's all good, and I'm delighted to be helpful that way. All right, we have David. David is age 18 and he gets a job at $10 an hour. He's a student and works weekends with a total of 8 hours a week. Therefore, he's making $80 a week. In a 4-week month, his total compensation, therefore, is $320. Good news is he's a student. Because he is a student, it does not reduce his SSI. So his $320 is on top of the $841. So he actually receives what, $1,161 a month, and that's tax-free. And so he can have his $1,161 a month, and it can and pay no taxes, have Medicaid waiver services, can have all of that. It all works together beautifully. But again, no reduction in his SSI because he is still a student at 18, and the student earned income exemption or exclusion is protecting them there. Second, Susan is 21 and no longer a student, so no student earned income exclusion for her. She has a part-time job working 20 hours a week, earning $9 an hour. She's paid biweekly, earning $360 every 2 weeks. In a 3-paycheck month, she earns $1,080. So SSI is going to overlook the first $85. That's 20 plus 65. The remaining $9.95 will be reduced by $1 for each $2 earned. So what's interesting here is that one might think, man, you go out, you work 20 hours a week, and now they're going to cut your SSI. Wouldn't it make sense just not to work? Just not work and get your full SSI benefit amount, which again this year is $841. But let's look at the numbers to determine, just how far ahead Susan is by working. So we said that in this 3-paycheck month that she earned a total of $1,080. She still receives $343.50 of SSI. So that total is over $1,400 per month. And what's significant here is that if she didn't work at all, $841, but if she does work, then it's the $1,080 plus the $343, or over $1,400. So $800 versus $1,400, she is miles ahead by continuing to work. Okay. And third example, Jerry is a dual eligible, receives $400 of SSDI and $441 of SSI. He's employed at $10 an hour and works 24 hours per week. He's paid biweekly. He grosses $480 every 2 weeks. And in a 3-paycheck month, his total gross is $1,440. So let's see here, Jerry has a problem. At $1,440 per month, he has exceeded the SGA limit that Social Security imposes of $1,350. So this will cause him to lose his SSDI benefit of $400. Is his earned income at the earned income of $1,440, he also loses SSI. That's a problem, as the loss of SSI may put his Medicaid and therefore Medicaid waiver services at risk of loss. So for him, it's best to stay under the $1,350 per month, because if he does, then he will have the let's say $1,300 in wages as an example, and can still receive $400 of SSDI. So now he's at $1,700 per month. So again, a person is always, or nearly always, financially had to have employment, even with the government benefits. Okay, I again invite anyone and everyone to ask questions, because now we're transitioning out of SSI and we're going to look at SSDI, or Social Security Disability Insurance. It pays a benefit to adults who have a disability that began before 22. Now that's what we call the adult child benefit. And that's where you can actually, as a consumer, draw off of a parent's Social Security record. It really gets interesting. And frankly, it gets quite generous. But if a consumer with special needs is going to draw off of a parent's Social Security record, which is how they draw a Social Security disability, though perhaps they have never worked or paid into Social Security taxes, et cetera, it's not necessary. One does not have to have an earnings history, does not have to have employment in order to be eligible to draw off of a parent's record. So they would want to be unmarried, or in some cases, if married, to a consumer also Social Security eligible with earned income under the SGA limit of $1,350. But an aha moment, because in the blind and visually impaired community, a lot of lobbying occurred decades ago, and they were able to accomplish getting a higher earnings limit. And so the SGA limit, substantial gainful activity limit, in the blind community is $2,260 per month. And so there's a substantially higher earned income limit that's applied while maintaining eligibility for Medicaid waiver services, et cetera. Okay, so benefits can continue throughout the adult's lifetime. And let's see here. Oh yes, the adult child benefit. This is drawing off of a parent. So a consumer can draw off of a parent even if they have never worked a day in their lives, even if they are not capable of working. So they've not paid any payroll taxes. They have not paid into the Social Security system. But nevertheless, they can draw off of a parent's Social Security record. And the beautiful thing about this is there's no reduction to the parent's benefit. This is over and above. So there's no disincentive to pursuing this benefit. And I have a family situation right now where we're doing this. The father passed away just a month ago, and there is an 18-year-old son who is currently drawing SSI. However, the passing of the parent is a triggering event. As you can see at the bottom, death, disability, or retirement, any of those three are a triggering event. And that enables a child that meets the eligibility criteria, which the eligibility criteria, again, is single, earnings not exceeding the SGA limit, which for individuals that are legally blind is $2,260 for 2022, and that they remain single. So disabled before 22, earnings under 2260 if statutorily blind, or otherwise 1,350, and that they have remained single, or if married to someone in a similar situation. Okay. So benefits can continue throughout the adult's lifetime. So that's exciting in that once one qualifies for the adult child benefit, they can receive it for decades, literally. And so these benefits are worth hundreds of thousands of dollars. The child's benefit is paid because it can be paid off of, or one can attach themselves to a variety of records that can include the record of a biological parent, adoptive parent, or in some instances, a step parent, where they are a dependent. For an adult person with a disability to become eligible to this, entitled to this child benefit, one or more of the parents must be receiving, again, the retirement benefit, the disability benefit, or the death, or have passed away. So how generous can these benefits be? We are seeing retirement benefits now for individuals up to as much as $3,000 a month. The adult child benefit, therefore, can be in some cases as much as $1,500 a month. On a survivor benefit basis, it's up to 75%. So if someone has a $3,000 retirement benefit and passes away, the adult child could be drawing as much as $2,250 per month as an adult child. So there is a lot at stake with these benefits. They are extremely valuable. Okay. So SSDI can replace SSI or be paid in addition to it, depending upon the SSDI benefit amount. So in essence, SSI is the final safety net. If a person is eligible for some amount of SSDI, it only makes sense that SSI would dollar for dollar reduce for the amount of SSDI being paid. SSDI may be paid from a consumer's own record. 4 quarters of Social Security earned in a year with $6,040 or more in earnings. So it doesn't take much to accumulate Social Security credits. $500 a month basically is all it takes in the way of earnings that you pay taxes on, or what you're receiving in the way of earnings. So $6,040 for the year, and anyone that earns that or more, therefore, has earned enough to qualify for 4 quarters in that particular year. So as a result of that, one can become Social Security eligible very early on for a Social Security disability. In fact, I've seen 23-year-olds already eligible to draw Social Security retirement benefits. Again, it can occur earlier and easier than you think. Advocacy is a really good thing. So SSI and or SSDI coexist well with part-time employment. So the point being there is that your child can still maintain their SSI, their SSDI, as well as Medicaid waiver services, et cetera, despite having employment. Unlike SSI, SSDI does not penalize for earned income. So this is particularly exciting. What this means is that if a consumer or individual with special needs accumulates funds, then the SSDI benefit is not going to be reduced or reflective of earned income. So unlike the SSI, where after the first $85, there's a $1 reduction for each $2 earned, with SSDI, there's no reduction for having earned income. And so it's possible to have SSDI, in some cases, some amount of SSI as well, while still maintaining part-time employment, Medicaid waiver services, and disability Medicaid. So you can have it all, basically, if you know what the limits are and how to work within the system. Okay, we have, I think, maybe an example coming up here shortly, but the consumer becomes Medicare eligible 24 months after the first month of SSDI benefits. So the way for a young person to become Medicare eligible is to become eligible for SSDI, and after 24 months of SSDI, then they are Medicare eligible. Child benefit amounts can reach as much as $2,000 per month, depending upon whether the parent's triggering event was retirement, disability, or death, and if there is a surviving spouse. So nevertheless, adult child benefits have really come of age. To maximize the child's benefit, the highest parent wage earner would want to work until 67 if the first and foremost priority is to maximize on the benefit for the adult child. Then one would work till as close to age 67 as possible, driving your income up as you move closer to retirement. Okay. So, all right, so we'll pause just a moment. Are there any questions regarding SSI or SSDI? Anything that anybody has in the way of questions? We're about ready to move into Medicare and Medicaid and Medicaid waiver services. Okay, again, the chat is the function that works best for entering your questions. You just click on the icon on the menu bar that says chat. It looks like a text icon from your phone, and you can enter your question, and I'll be delighted to provide helpful information and answer the question. Okay, move on. Medicare and Medicaid, they are not the same. Medicare covers medical needs. It is not a financially needs-based program. So the $2,000 does not apply to Medicare. Provides benefits for all necessary medical treatment, regardless of the recipient's financial status. So again, Medicare is not a means-tested benefit. One's income can, in some cases, affect the amount of Medicare premium for Part B that's paid. But generally, in the realm of special needs or having a disability, then the Medicare benefits will provide healthcare, et cetera. Now, usually for our individuals with special needs, they become eligible for Medicare as a result of becoming eligible for SSDI. That can be off of their own wage record, as we mentioned, as early as 23. It can be from a parent situation. All right. It is a needs-based program implemented by each state individually with reimbursement by the federal government. Government health insurance for children is available, typically with certain disabilities, and no exception in Indiana. There's a special needs health insurance. It covers the cost of certain medical care and for those with low income. Children may qualify if a parent's receiving Social Security or Social Security disability. It funds Medicaid waiver benefits, so Medicaid funds Medicaid waivers. So some people have Medicaid because they're getting help in a in a way that's from their own employment. So yeah, it's good to experiment if one's eligible for or able to explore employment, that type of thing, because as little as 6 to 8 quarters or in as little as 2 years, they can make themselves potentially eligible for Social Security disability. And the income level they need to earn it to be eligible is that roughly $500 per month, making them eligible for Social Security disability benefits. Okay, continuing on with the Medicaid theme, Medicaid pays bills for people that are low income, cannot afford medical care, and meet other eligibility requirements. States design their own programs within federal standards. People receive SSI or temporary cash assistance are automatically eligible. If age 18 or older, the application for SSI is required to apply for Medicaid or Medicaid waiver services. If you have a family member that is 18 or over, then if they are already receiving SSI, then go ahead with a Medicaid waiver. If the people that, at 18 or over, it's just that this makes prior to 18 the ideal time to apply for the Medicaid waiver. So if possible, depending upon the nature of the diagnosis and so forth, whether it's the Family Supports Medicaid waiver through the BEAD system or the Aged and Disabled waiver through the area agencies on aging, it's ideal, of course, if one applies for the waiver before age 18, because then involvement with SSI is not required. But once our young person turns age 18, they will need to have a pending application for SSI in order to initiate an application for a Medicaid waiver with either system, with the area agencies on aging or with the Bureau of Developmental Disability Services offices. Okay. Just a cursory review of what Medicaid covers. This is consistent across the country with Medicaid plans as these guidelines are set by the federal government. So just a quick overview of the, again, types of expenses that Medicaid will cover. Okay, and so a little bit more on waivers. States can waive certain requirements, including the requirement that individuals live in an institutional setting in order to receive Medicaid funding. So young children might otherwise not be eligible for Medicaid because of a parent's assets or income. But that's where the term waiver comes from. Two major things that are waived, of course, are the household income or assets, and also they waive where services are provided, which is where the home and community-based waiver services language comes from. So regardless of how much money parents have or how much income they earn, the child can be eligible for Medicaid and by extension, Medicaid waiver services. There is an overarching income limit, and in 2022, that limit for Medicaid and again by extension Medicaid waiver services is $2,523. So that's the monthly income limit one wants to be cognizant of. If one's monthly income goes above $2,523, then they lose eligibility for Medicaid. So $2,523 is the maximum monthly income, and assets, again, stay at the $2,000 level to maintain eligibility. So eligibility for children is based on the child's status, not the parents. So good to know that the federal government is always trying to understand where the parents are at, and where the parents are at can have an effect upon the eligibility. So it really is exciting that families with young kids, a child or children with special needs, can engage with the waiver offices, get a child on a waiting list, and be on a waiver in a matter of months. Again, really exciting. Other states are not faring as well. I mentioned I have an office in Louisville, and the entry waiver in the Kentucky, in the state of Kentucky, is called the Michelle P. waiver, and the wait for that waiver presently sits at around 12 years. So you heard me right, a wait of about 12 years. That may sound horrendous, but we were in a similar situation up until the fall of 2004. In the fall of 2004 is when our waiver programs were reorganized. And yes, there were winners and losers, but I think in the long run, it has proven beneficial because we don't have the backlogs like some other states of this ridiculously long period of time. Okay. Oh, the last bullet point, which is becoming better known. And it's only been around for a few years, but parents employed to provide care for a child age 18 or over. Basically, a child that otherwise without the parent's care might have to be placed in an institutional setting. Parents can serve as a direct service provider, working with a provider or in some cases independently. And the income that's generated from this is generally considered to be federally tax-free. So it's a great break to parents to be able to provide services for their adult child with special needs, be paid for it, and on top of that, not have to pay taxes for it. So really cool stuff. Okay, so the specific waivers are now on the screen. And here in Indiana, the waivers, the most popular, of course, are the family supports waiver. The community integration habitation waiver is popular, but of course the state is very careful in dispensing that because it's costly. There's the aged and disabled waiver, the TBI or traumatic brain injury waiver, and the choice program. Services in the home and community for those with developmental or intellectual and physical disabilities. So the aged and disabled TBI and choice program, all three of those are tied into the Area Agency on Aging. So in central Indiana, that would be SACOA, the Central Indiana Area on Aging, and other names around the state. But there is a statewide network of offices that assist with the waivers that are not specifically developmentally delayed related, more medically based. Again, those waivers are the aged and disabled waiver, the TBI or traumatic brain injury waiver, or choice program. Okay, then we have the aged and disabled waiver. The aged and disabled waiver has no weight. So it takes a little while to process it, but unlike the family supports waiver that has probably a 12 to 15 month wait at this point, the aged and disabled waiver is usually faster. And so those are the two most popular entry waivers, the family supports waiver and then the aged and disabled waiver. The budget for the family supports waiver, I believe, was increased this year up to $19,300. The 8 to 10 month wait is now closer to 12 to 15 months. Hopefully that will improve in time. The CIH waiver has a larger budget. The community integration habitation waiver has a larger budget, and aged and disabled or deceased caregiver extreme situation are the variety of circumstance where the state may consider awarding someone the CIH waiver. The Bureau of Developmental Disability Services offices, the BEADS office, and area agencies on aging for multiple counties, helping with the application and eligibility process. So questions about waivers, about Medicaid waivers in Indiana. There's a menu of services, and if you have a family member with special needs, then it's a matter of figuring out what waivers the better fit, what services are going to be most impactful or helpful for your child, and reaching out to the respective agency to get that started. We can help as a part of participating in the series. I'm pleased to extend to you a free follow-up consultation. The free consultation, we usually set aside about 75 minutes for each family. It can be in person or it can be virtual. So either is available. And Jamie Sturchy, our parent advocate and relationship coordinator, coordinates those, and she will be reaching out to you and follow up to each of our sessions to see if there are any questions that remain unanswered and or determine if it would be helpful to schedule the free follow-up consultation. Again, it's absolutely free. There's no cost whatsoever to you to take advantage of it. And through that, we can personalize the topic or subject matter that we're covering this afternoon as it applies to your situation. There are a couple of additional programs. There's the CHIP program, Children's Health Insurance Program. And this is through Who's Your Health Wise, covers children to age 19. Recipients must be qualified as low income. So it's a financial based benefit, but nevertheless, it can provide services that otherwise you might be paying out of pocket or with a copay, et cetera. So that's Children's Health Insurance, or CHIP. And then there is the Children with Special Health Care Needs. And this is the program that has a list of diagnoses. So the key is does your child have a diagnosis that's on the list? In which case there are some benefits for you. Okay, so as a special financial professional, I work with attorneys. We have an informal network of attorneys throughout Indiana and Kentucky. I have an attorney in New Albany and Evansville, two in Indianapolis, one in Fort Wayne, 3 in Louisville, 1 in Lexington, and so forth. So we have the geography covered, and these attorneys assist with everything from estate planning, setting up wills, designating who you want your guardian to be. The attorneys also assist with setting up special needs trusts, dealing with guardianship issues. Do I or don't I look at guardianship, that type of thing. Appealing government benefit decisions. We have attorneys that specialize in that. So we certainly are blessed to have wonderful attorneys in our network, so that the work that we do to assist families is much more broad and comprehensive. Okay, so this just walks through some of what we do. There is a 6-step, a very well thought out 6-step special needs planning process that we work through with families. We've, again, helped thousands of families with the process, but we like to make sure that your child or loved one is receiving all services, all government benefits they are potentially entitled to. It's very helpful. Okay, let's see here. This is my contact information. If you've got questions, now would be the time. Because we've not had questions, we've moved through the material just a little quicker than usual. So if you have questions, now would be a great time to bring them up in the chat box. I think is probably the best way.
Yeah, so far nothing.
Okay, all right, very good. All right, so as far as government benefits and programs, the application process varies depending upon the benefit being pursued. With Social Security, there is an online application process that we help families get going with. And in some cases, SSI may be available starting at birth. So it just depends upon the family's financial circumstances. If not, then most often when the child turns 18. But with SSI, usually it's a combination of online and by telephone. And then with the Medicaid waivers, of course, through the BEADS offices and through the area agencies on aging. Lisa, if there are no questions, I yield back to you.
Okay. Well, first, I want to thank you for joining us and telling us all of this information. I know this is something I get questions about all the time. And honestly, I usually don't have enough information to give good answers. So this is great. I did want to tell all of you participants that when you registered, we have you registered for all 4 sessions. However, we do still have the registration up and open. So if you know someone that you think would be really interested in next month's topic or any of them, they can go ahead and register and we will add them. So it's not closed. So spread the word. Get some people out there, especially if you know a parent who would benefit. So I have nothing else to say except thank you for all of you coming. We appreciate you, Gordon, for giving us your expertise, and I appreciate all of you for spending your time with us. Don't forget to fill out that evaluation, and we'll see you next month.